Hello, everyone. Today is December 8th. I am Ashley Wilkin, Senior Wealth Manager with the Rice Partnership, and I have Orest Saikevych here, our Chief Investment Officer. Hi, Orest.
Hi, Ashley, and season's greetings to all.
So 2020 has been such an interesting year with lots of heartbreak, but also lots of opportunity. So where have we ended up after all the ups and downs?
Well, we've ended up overall, Ashley, just to give you, a few of the major indices. The S&P, after being down over 30% in late March, is now up over 16% as of yesterday's close. That's, just an amazing turnaround. Dow Jones Industrials also doing well. They've lagged a little bit because they're more the industrial or the cyclical stocks. They were down 34% in March, now up 8%. The big winner, of course, has been the NASDAQ with some of the big FANG names like Apple and Microsoft, etc. It was down 23% in late March, now up over 40% year to date. And finally, just a little bit of flavor, the international indices, the Morgan Stanley EFA index, after being down about 33% at its low point in March, it's now up on the year about 5%.
Wow, but there's still a lot going on. We have pending elections in January and also seems like a current COVID surge. So is the market missing something here?
I don't think so, Ashley. The concerns are well documented. I think the major impetus that got us off the lows was the massive stimulus we saw from both Congress and the Federal Reserve. Congress came up with the $2.2 trillion CARES Act. It's unprecedented, and now they're talking about another possible stimulus bill. Keep in mind, too, that there's a lag effect between the economy and the stock market. The stock market usually leads by several months, anywhere from 6 to 9 months. And then finally, keep in mind the fact that the pandemic has had a split nature on American business, whereas, you have the industries that have been impacted the most, like, for instance, travel, hotels, casinos, cruise ships, etc. On the other hand, you've had the big beneficiaries of it. Housing is in a boom right now. Autos are doing well because people don't want to commute by commuter trains, so they want cars. So that has led to kind of a split nature in the market. So not all the economy is in the dumps. There's a good chunk of it that's actually doing quite well. And then finally, keep in mind that the vaccine news over the last month and a half has been very positive. Certainly a 95% success rate from the Pfizer vaccine, and also the Moderna vaccine is very, very encouraging. And so now we see light at the end of the tunnel, which is probably in the second half of next year, but at least now we know that there's going to be a date or a process for an end date.
So based on the stock markets, we can look forward to 2021, but are you a bull or a bear looking forward? And are you have a preference towards growth or value?
Okay, overall, we are bullish for 2021. I don't see the the magnitude of the increase that we've gotten since late March, but overall, we think 2021 will be a good year for the markets. Overall, we're by philosophy more growth oriented, but lately we've been tilting a little bit more towards some of the value stocks because these are the reopening trades overall. Companies that are good companies but have been temporarily hit due to the pandemic, but that we feel will come back strongly in 2021. But overall, we still will retain some of our growth stocks. So we're still going to have a bit of a growth emphasis, even though we are tilting it a bit now towards value.
Thank you, Orest. We appreciate your commentary as always, and we wish everyone happy holidays and a happy new year.
Thank you, and happy holidays to all.